So it's the 1st of October. October has officially started and September was a very horrid month in the stock market. So in today's video, I'm going to be sharing with you my InvestEngine portfolio. So as a disclaimer, this video is not financial advice. All investment carries risk. And for transparency's sake, I am an affiliate partner with InvestEngine. However, this does not stop me from giving my own personal views, because at the end of the day, I care more about you as a viewer and a community member than I do earning money from referrals or whatever it is. However, that being said, if you do want to sign up to InvestEngine after watching this portfolio video because you think it is the right investment platform for you, if you use my special link in the description down below, you'll be getting £25 when you sign up, complete registration, and top up your account with £100. And this is more money that you will get from using other links from other people, because I am an affiliate partner with InvestEngine. So like I said, the past few weeks have been really crazy. The pound has crashed and the bond market has crashed too. So it will be very interesting to see my InvestEngine portfolio. So without further ado, let's get to it. So some things have changed in my InvestEngine portfolio. So the first thing to notice is that InvestEngine has updated their app and it now has the total balance at a glance, which I really like. So I've contributed to this portfolio and now for the first time the value is above £400 overall. So the first thing we're going to do is go into the managed by InvestEngine enhanced portfolio, and this is the growth portfolio. So at a glance it is down by £23.12. Don't look at the negative percentage number because this is wrong and I've explained it in many other videos why, but this is the most I've seen this portfolio down by, and we're going to go into more details. So the current portfolio balance is £246.88. So as you can see, in total I've been paid £5.48 from this portfolio. So this is a growth portfolio which pays me income. So as you can see, over the past 2 months I've gotten £2.75 in December, which is very good for a portfolio size of this, and in October I am to be paid £1.50. If I go into projections now, we can see how much I am estimated to make over the next year. So I'm estimated to make around £11.80 from this portfolio size of £245. So as you can see, November is not great, but December is £1.87, February is £2.47, August is £2.47. So overall I should be making around £11.80 in income from this portfolio. So it's managed by InvestEngine and their algorithms, which chooses a allocation of certain equities, so bonds and stocks, that targets a certain yield per year. So for example, my target yield is 4.81%, and this is because I've switched this slider here to the highest risk, and I'm willing to take all this risk for this amount of returns. So if you don't have the appetite for risk, you can always lower this bar here and it will change the allocations to 100% bonds, which is funny because right now the bond market's not doing well. And that takes me on to why this portfolio is doing so bad right now. Because the allocation is 20% equities, so that's stocks, and 78.1% bonds. And if you've been keeping up with my videos, you would know that the bond market almost crashed the other day and the Bank of England had to step in and start buying bonds. And this will temporarily stabilize the bond market. However, in the long term, the stock market might crash along with it. But anyway, what this portfolio is investing in is the Investico S&P 500 high dividend, low volatility. Funny because right now nothing is low volatility. Vanguard FTSE 100, which is actually doing pretty good and it does pay a nice dividend yield. I'm not sure if it's going to say here how much, but it's paying around, I don't know how much, like 4%. So in terms of bonds, you can look at what kind of bonds it's buying. It's buying the iShares US inflation linked bonds 35 years, UBS US inflation linked, so a lot of high yielding inflation linked bonds, because I think that's what InvestEngine's algorithm thought it would be quite stable in the coming future. But of course no one can predict, not even the best algorithm can predict the market, the bond market or the stock market. So that's something to take into consideration. In the long term, I'm pretty sure this portfolio will rebalance itself because InvestEngine is managing it, and it will do okay after we've come out of the storm that is the recession and the current impending doom that is the UK and the entire world economy. So that at a glance is the InvestEngine enhanced profile, and the next tab we're going to go to is dividend, and as you can see there's absolutely nothing in it. So I thought I want to get more exposure to dividend stocks and I want to buy the FTSE All World high dividend yield. But anyway, I'm not going to delete this now because I might actually start buying some FTSE All World from here later on. Next I have the YouTube ETF, and this was a video that I made a few weeks to months ago, probably months ago, that I put in £100 into the S&P 500 500 and another company. So if you scroll down, the portfolio balance is £122.97, and I had an 80-20 weighting of the Vanguard S&P 500 and the FTSE Japan. And as you can see, it's not doing bad at all, and there is a slight confession I need to make to why it's not doing so bad. So in my previous video, I did say that I'm going to keep investing into the S&P 500 and the FTSE Japan on a regular basis. However, due to the volatility, I just knew, well, I had a strong feeling that, you know, the S&P 500 is going to crash, so I took my money out and then I bought it again. So I kind of timed the market, which I don't recommend doing, but for me in this particular case it has worked out. So it was an 80-20 allocation, so it was 80-20 S&P 500 FTSE Japan. However, you can see right now it is, the actual value is 53 S&P 500 and 46 FTSE Japan. And this is what I really like about InvestEngine, is that you can actually buy however much of each you want. So if you just wanted to put money into the S&P 500 at that particular time because you thought you know what, it's down, you can buy however much you want on the S&P 500. However, if you want to put an equal weight into both, you can just press invest here and, you know, put in £20. Obviously I don't have cash in this portfolio right now, but it's easy to put in an 80-20 amount. So if I put in £10, it's going to split £8 S&P 500 and £2 FTSE Japan. And if you want to manually trade, which I've been doing, you can just buy and sell however much you want, provided you have cash in this portfolio. So right now I only have 86p cash, so of course I can't buy anything. So that's what I really like about InvestEngine. You can just choose how much you want from each, or you can put in as like the split that you originally made the portfolio in. I hope that makes sense. Lastly, I have another fund called S&P 500, which was an S&P 500 split of 95% and the Germany all cap, which is proving to be one of my favorite stocks right now due to its volatility. It was 95.5, but current weighting is almost equal. It's almost 50-50. That's because I saw the Vanguard Germany all cap and I wanted to buy more of it, which is a good thing about InvestEngine that lets you do that. And also I can buy S&P 500 whenever I want as well. But as a regular investor, the easiest thing to do is just when you add money, you can just press invest and, you know, put in £10, whatever, and it will allocate 95.5 for you. There's no need to actually manually do it, but I am more of a manual investor. Another thing that I do have to say is a positive about InvestEngine and one negative about Trading 212 is I couldn't find this stock on Trading 212, and it is on InvestEngine and Freetrade. I'm not sure why it's so hard to find it on other platforms. This gives you exposure to the German market, which, if I'm not incorrect, is the 4th largest economy in the world. Houses companies like Adidas and other large German companies. Right now, Germany's economy is doing really bad because of, you know, the tensions in Ukraine. Because Germany relies so heavily on oil from Russia, they've had the Nord Stream pipe cut off. The Nord Stream 2, they've cancelled the plans. This has led them to have a fuel poverty crisis. I've heard from a German student of mine that they've actually completely closed down all the swimming pools because, of course, swimming pools require a lot of energy to heat up. So a whole generation of children are not able to learn to swim this year, which is very sad. But anyway, I think the German economy is going to get back to where it was and more. So I think right now, not investment advice, but I think for me, Germany All Cap VJER is a very good ETF to buy. And I do think that InvestEngine has high quality ETFs. So I don't think it has, you know, the full list of ETFs. Not all ETFs are going to be great, to be fair. Vanguard ones usually are good. So just a quick overview on the analytics of my portfolio. So we can go into all portfolios and you can see that my exposure to countries, North America being the highest, around 24.5, Japan being 13%, UK being 6%, and then we can see the rest of the world and other countries, so Europe excluding the UK, Asia excluding Japan, and emerging markets. So for a balanced portfolio, you want to have exposure to most of the world. So one thing that I might not have a lot of exposure to is emerging markets. And the reason why you would want to invest in emerging markets is that emerging markets have potential of higher growth. So they have potential of double-digit growth. A developed economy such as the US is not going to see double-digit growth. Right now it's seeing negative growth anyway, and that's something that I should be aware of as an investor. Maybe I want to expose myself more, sounds funny, but to the emerging markets. And this is all from InvestEngine's managed account because I don't buy bonds. I don't think I'm old enough to buy bonds. So just in case you didn't know, when you're closer to retirement, you want to buy bonds because bonds are basically a guaranteed way of making money, even though the yields are so much lower. Take that for what it is. So that was my InvestEngine account. I'm going to be doing monthly portfolios, so stay subscribed, and I have portfolios on many other investment platforms too. Don't forget that if you use the link in the description down below, you will get basically fee £25 free when you do sign up and top up £100. There is no obligation to use my links, and I know it sounds like I'm trying to advertise my links so I earn more money, but honestly, if no one signs up, it doesn't really make much of a difference to me. I just want to show that I actually do genuinely think that InvestEngine is a good platform for beginners. It has very low fees, it has a good selection of ETFs. It is by no means perfect. So one thing that does bother me about InvestEngine is the fact that it takes so long to execute orders, and this is probably going to be a major reason to why I'm not going to make it my ISA for next year. However, I do think that it is a good platform to continue investing, and I will definitely be depositing money into my InvestEngine account on a regular basis. So every month I will be doing portfolios for that reason. Make sure to check out some of my other videos, and I will see you in the next video.